Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Notice I did say on 11/13, due to the breakout of the British pound above the prior week's high today, 11/13, the likelihood of a similar upside breakout by the dollar versus the euro increases. So put right strategy or premium right strategies would give away some upside potential. That's the only thing I worry about, guys. I'm so worried about getting off of the train too early. Obviously, look, when I first put these trades on, I have no idea they're going to do what they're doing. It's a wonderful thing that they're doing what they're doing. As I mentioned before, some of the currency hedge funds who have had a bad year, a trade like this could bring them to where they're close to even for the year, so they could stay in business next year because they don't have that big of a drop. And if they happen to trade multiple assets like currencies and indexes, even if they have a 40% drop in the S&P or whatever and a 60% gain in the currency markets, they could come out pretty good. So they have the firepower to make make the dollar go higher. So a simple 76 put below that range right now, or the use of a 10 weighted moving average would make more sense. I'm sure the Fibonacci trader who's going to come on here will talk about places to place protection again. But the best lesson I can tell you is to be prepared for any price movement, because price is always dynamic. So you always have to be planning your trades. You always have to be adjusting your trades, and that's pretty much how trading is supposed to work. Swiss franc here is the next currency pair. On 6/23 of 08, we had a breakout. We had a breakout of a lower trading range, and at that point in time, I noted the possibility of a bullish continuation pattern, which we call the bull flag. I said possible bull flag, buy calls, 105 calls on a breakout of the top here with a target of 108. So I already had a target in mind based on past resistance. And also I says, if possible, you could also buy 101 calls on a test of the lower line of the flag. Now, either entry is possible. Some people do not like buying falling prices. Some people will not ever buy a falling price. Some people like to buy strength, okay? So a breakout in the direction that you think price is going to go is a perfectly okay entry. Some people buy only pullbacks, okay? Pullbacks to areas that had been resistance in the past. And notice right where the lower bull flag line is we did have a little area that was resistance in the past near 101. So if you did buy a dip to that lower line with a tight stop loss, or since you're using call options, if it expires, it expires. You know what your risk is. It could be a nice entry at a little bit lower price. But it's entirely up to the trader. Okay, so it formed the possible flag between April and June of 2008. And a plan to buy either the pullback to the lower line of the flag or a breakout above the upper line were possible suggested entries. A position was open using 101 calls on a touch of the lower trend line with a partial exit at 108 as my first planned target. And, of course, the lower trend line was touched. It actually went a little bit lower, closer to 1 to even 100. But either entry would have been possible. And up at around 108 or so, price kind of stopped out for a little bit for a few weeks. So that was a place to take off part of the position. Okay. We did trade in a range after that between 108 and close to 110.50 for a few weeks. If there were sell orders in that particular area, they were being filled. There were plenty of willing buyers, plenty of dollar buyers at that point. It was a nice little uptrend underway. We actually formed another continuation pattern at that point, which was called, it's the beginning of it, you can see it here. We had like a ascending triangle continuation trend pattern forming. We had a couple of weeks of higher lows. We had flat highs. And again, if you were flat and never in a position, that would be a possibility for an entry at these higher levels. Okay. At this point, though, on 9/1, I said a partial profit was planned at 108 based on the measurement move. What I mean by that is I kind of measure where the bottom of the flagpole is up to the top of the flagpole, and I project out into the future where a possible profit target would be based on that. So if I measure from my 98 here onto the top of my flagpole close to 106, I can then project that distance into the future as possible profit target for the first, we call them measured moves, okay? And again, a protective 107 put would have protected the lower 100 entry, okay, or the 105 breakout. So it's pretty close to the 105 breakout area and might not have made as much sense as if you would have wanted to use a protective put from the lower entry, because now you've got a bigger profit to protect. The ascending triangle bullish continuation pattern we talked about formed again. And again, a week or so later, we busted out of there. So these are what we call trend continuation patterns. Trend continuation pattern number 1, bull flag. A trend continuation pattern number 2, ascending triangle. We have a little gap up here, and now we're trading in a range between approximately 112 and at that point a high of approximately 113. Okay, and this is on 9/8. So another bullish continuation pattern formed last week called the ascending triangle, higher lows with flat highs as characteristics, which again, they should be some kind of support and on a retracement in the future. The pattern also formed at the 110.50 level horizontal support. So you've got a couple areas where there should be some kind of support. The SFC features a daily gap to begin the week at 9/8 with a daily low of 112.33. So this is the picture I'm faced with when I'm looking at this chart on 9/8, and I'm saying, okay, I have a position. What are my options on where I want to protect myself? I have to make note, too, of the prior week's lows here at about 108. And I didn't use the Fibonacci retracement on here, but that 108 level would probably have been pretty close to the 38% retracement of the move from 98 to approximately 112. Okay, just by eyeballing it. Exit the position at 111.70, which was the gap origin, and re-enter on a pullback to 110, or re-enter on a breakout of the top of this current week's range. Now, these are my suggestions on how you could take your profits back on 9/8. So I'm still planning on what to do at this point. I could also buy the 112 protective put below the 9/8 daily gap low with a target of 110.50 to remove the hedge. So now this is one of those situations where I'm looking at this situation. I see some resistance coming up, but the resistance is not thick enough for me to actually think of a premium selling plan at that time. Okay, but I am also kind of going with either buy a put and take the hedge off when I come down to what should be support. Okay. So at that point in time, if you look back over here on this chart, which is from 11:10 now, I'm noticing here that I did have a pullback that actually came down to about that 108 price level. Okay, if I can bring that chart up a little bit wider, you can, oops, that's just a little bit too wide, guys. So let's go back down here to here. That might be a little bit too wide too. Okay, this is the area I'm concentrating on. So after I hit that 112 level, I actually retraced almost all the way back down to about 108. So having that hedge that we were just talking about and planning on unwinding that hedge would have actually been a pretty decent strategy at that time. Notice I wrote stage 3 top if price breaks out to the downside. Possible new leg up if price closes above the upper line. This is on 11:10. So this is the picture now on 11:10. It did consolidate for quite a while before it was actually able to break out and make a higher high here.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.